This earnings season, we've seen a lot of hand-wringing about the state of the consumer and the state of retail. Even Amazon gave us cautious guidance, but not all retailers are in the same boat. This morning, Walmart proved that when you offer shoppers great value, they'll keep showing up. That's how Walmart managed to report a glorious quarter. They delivered 4.2% same-store sales growth. Wall Street was only looking for 3.4%, with the vast bulk of that coming from transaction growth, not higher prices, which is not what you want. You don't want this number to be made by inflation. When you keep prices at a reasonable level, the traffic takes care of itself. This is what allowed Walmart to post a sizable revenue beat with expanding gross margins and a 2-cent earnings beat off a 65-cent basis. Both the core Walmart business and Sam's Club put up just fantastic numbers in the U.S. Walmart International had softer sales, but its operating income came in much higher than expected. Imagine also had good things to say about Flipkart, their e-commerce subsidiary that's a major player in India. In fact, this company's even doing well in China with strong membership trends and especially strong performance from Sam's Club over there. Everybody else is getting crushed by China's weak economy, but not Walmart. What else? All right, now here's a stunner. Walmart put up 21% e-commerce growth worldwide, driven by store-fulfilled pickup and delivery. Their nascent advertising business, the margins here are insane, grew by 26% globally, and their loyalty program, Walmart Plus, had double-digit membership growth. Best of all, unlike so many other retailers, Walmart raised its full-year forecast across the board. They raised the revenue growth outlook from 3 to 4% range to the 3.75 to 4.75% range. It might not sound like much to you, but when you're dealing with low to mid-single-digit growth, that is meaningful improvement. They also raised their full-year earnings per share outlook by 9 cents per share at the midpoint. Remember, Walmart only beat by 2 cents this quarter, so the 7 cents, they're coming for the rest of the year. So many companies just won't raise. These guys did. In fact, the strength's really coming from the fourth quarter because the earnings guidance for the current quarter came in a tad light. That little fly in the ointment wasn't enough to prevent the stock from shooting up nearly 7% today. This is a gigantic company, people. And by the way, not a tech company, although it's got a lot of tech. Why did this happen? Because as strong as the numbers were, the conference call was heavenly. It was fantastic. Just listen to what Walmart CEO Doug McMillon had to say. I'm going to quote. So far, we aren't experiencing a weaker consumer overall. Boom! Very encouraging. He goes on to say, around the world, our customers and members continue to want 4 things. They want value. They want a broad assortment of items and services. They want a convenient and enjoyable experience buying them. And they want to do business with a company they trust. Walmart checks all 4 boxes.
That was easy.
They basically laid out a playbook for how a retailer can thrive in this environment. I don't think they should help. Maybe other companies can't do it because right there it's like, here, you want to take us on? This is what you do. I was pleasantly surprised when McMillan stressed not just price, but also convenience. Gym management used the word convenience 11 different times on the conference call. While everybody knows Walmart has incredible prices, which should theoretically be enough to drive traffic at a time when consumers have less money to spend, thanks to years of inflation and softening economy, these guys made it clear that convenience is part of the secret sauce that keeps people coming back. That makes sense to me. Remember, even though we've got a very value-conscious consumer, she keeps paying up for various online delivery services, even though it's much cheaper to take out. DoorDash, Uber Eats, and Instacart are all doing well because these days people value their time even more than they value their money. McMillan went into more detail with this theme when he got a question from BMO analyst Kelly Banya during the Q&A session of today's earnings call. She wanted more color on how Walmart's taking tons of market share thanks to gains with, get this, upper-income households. Historically, that really hasn't been their demographic. Now, I have to tell you, my daughter and I, both my kids, we love shopping at Walmart. But we tend to assume most rich people wouldn't deign to set foot in one of these stores, even though I got to tell you, they are just dynamite. However, McMillan insisted value matters to everyone. Listen to this quote. As it relates to higher income people, they can buy more discretionary goods and they can pay more for convenience, and we're offering all of it, end quote. That's exactly how we feel when we go. Now, think online delivery fueled by Walmart Plus memberships. Throw in the new remodels, and he thinks he can keep taking share with higher income consumers. He's right. If you go there, you'll buy the stock. Now, there was a lot of interesting stuff on the call. We're talking about the biggest retailer in the world here, so they have some keen insights, even where you'd least expect it. For example, generative AI. It came up. McMillan said Walmart's using it to improve their product catalog. As he explains, and I quote, the quality of the data in our catalog affects nearly everything we do, from helping customers find and buy what they're looking for, to how we store inventory in the network, to delivering orders, end quote. According to him, the company would have needed to hire nearly 100 times as many people to handle all this data in the same amount of time without generative AI. Well, there you are. That's the best use case I've heard yet. It's either that or it would have taken much longer to get organized. That's the other way you look at it. So who says generative AI doesn't have a use case? It just saved Walmart a fortune. I keep waiting for a major grocer to mention the hit that the food business has to be taking, right, from the GLP-1s, has to. The weight loss drugs that eliminate cravings. Walmart's the nation's largest grocer, and they did actually mention GLP-1s on the conference call, but not in the way I guess I was looking for. Instead, we learned that their health and wellness business contributed to the strong same-store sales, primarily thanks to sales of GLP-1 drugs. They'll acknowledge it on the pharmacy side, but we'd still like to know more about what it's doing to the grocery side of the business. Right now, they say it has not been negatively impacted. Overall, this was a very strong set of numbers, and it came just a couple of hours before the better-than-expected July retail sales report. That combination was a huge driver of today's remarkable rally. When Walmart crossed these numbers, I said, no, not today, Satan. This is going to be a good one. But the bottom line, don't make the mistake of assuming that Walmart's results give you some kind of generic read on the consumer. You can't just extrapolate from the best operator in the industry to everyone else. This quarter is a testament to the fact that Walmart's management keeps doing an excellent job. I hope the rest of retail can come close. But when it comes to brick and mortar, with the sole exception of Costco, Walmart's in a league of its own. And you know what? I think it's got more room to run. Why don't we take calls? Why don't we go to Mike in Illinois? Mike.
Jim, how are you?
I'm doing well, Mike. How about you?
I'm great. I have a nice position in TJX, and I'm wondering if I should add to it before its earnings come out on the 21st.
Okay, so that's a dicey question because we're putting a little gun to my head, and I say take the gun away. TJX historically has not performed well around earnings. So what I would do, it was up very nicely today. It was up 2.5%. I would wait till after to buy because it tends to collapse after they're very conservative. People keep expecting them to say great things. They don't play it that way. Buy it after, not before. How about we go to Michael in Tennessee, please? Michael.
Hey, Jim. Booyah. This is Michael from Nashville, Tennessee.
Oh, I love that city.
Yeah, it's great. Born and raised.
Oh,
hey,
good
Jim,
for you.
my question is in regards to Cava. The company has plans to have 1,000 stores open by 2032. What are your thoughts on Cava's growth strategy compared to what
I love
Cava's been able to do?
No, Cava's real. It's the best new concept. I like it. It was down 10 points last week, and we recommend it, so I don't know. It's all the way back up. Why don't you give it a rest before you jump in? All right, the quarter Walmart just delivered is a testament to the great job from its management team. They are really good. I hope the rest of retail can follow along, but besides Costco, which we own for the Charitable Trust, Walmart really is in a league of its own. Hey, but we've got a lot of man tonight. I'm eyeing one under-the-radar housing player that I first learned from you, Cramer. Then, what's in and what's out in this market? After volatile action in the tech sector, I'm going to reveal what to watch. And, of course, all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.